Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 22nd, 2024, and we're diving into Moody's third quarter earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Moody's impressive performance this quarter.
Let's start with a brief overview of Moody's. Known for its credit ratings, research, and risk analysis, Moody's has been a cornerstone in the financial services industry. Today, we'll explore their latest earnings report and what it means for investors. Revenue and profitability overview. Moody's reported a revenue of $1.8 billion for Q3 2024, marking a 23% increase from the previous year. John, what are the key drivers behind this growth?
The growth is primarily driven by Moody's Investors Service, which saw a 41% increase in revenue. This was largely due to a surge in transactional revenue, which grew by 70%, reflecting heightened activity from infrequent issuers. Additionally, Moody's Analytics contributed with a 7% revenue growth, supported by strong recurring revenue streams.
And how does this translate into profitability?
Moody's reported a diluted EPS of $2.93, up 39% from last year, and an adjusted diluted EPS of $3.21, up 32%. This significant increase in earnings per share is a testament to their operational efficiencies and strategic investments.
Operational efficiencies and future outlook. Moody's operating margin stands at 40.7%, with an adjusted operating margin of 47.8%. How has the company achieved such robust margins?
The expansion in margins is largely due to the operational leverage within Moody's Investors Service, which saw its adjusted operating margin expand by 640 basis points to 59.6%. This reflects the company's ability to scale efficiently while maintaining cost control.
Looking ahead, what is Moody's outlook for the rest of the year?
Moody's has raised its full-year adjusted diluted EPS guidance to a range of $11.90 to $12.10, reflecting their confidence in continued strong performance. The company is well-positioned to capitalize on favorable market conditions and strategic investments.
Strategic initiatives and market position. Moody's Investors Service has been a standout performer. Can you elaborate on its strategic initiatives?
Absolutely. MIS's revenue growth of 41% is driven by increased issuance in corporate finance and structured finance. The company has capitalized on favorable market conditions with strong investor demand and tight spreads. This strategic focus on high-growth areas has bolstered their market position.
And what about Moody's Analytics?
Moody's Analytics continues to deliver strong recurring revenue, which now accounts for 95% of its total revenue. This stability is supported by their investments in innovation and customer-centric solutions, particularly in areas like Know Your Customer, KYC, and insurance.
Lastly, Moody's has authorized a $1.5 billion share repurchase. What does this signal to investors?
This significant share buyback authorization reflects Moody's strong cash flow position and commitment to returning value to shareholders. It's a positive signal of confidence in their long-term growth prospects.
Risks and challenges. Despite the strong performance, what risks should investors be aware of?
One area to watch is the increase in operating expenses, which rose by 15% due to higher incentive and stock-based compensation. Additionally, Moody's effective tax rate increased to 24.0%, which could impact net income if it continues to rise.
And how about their debt levels?
Moody's has $7.6 billion in outstanding debt, which is substantial. While they have a strong cash flow to service this debt, any adverse changes in market conditions could pose challenges.
Key takeaways. In summary, Moody's has delivered a strong third quarter with impressive revenue and earnings growth. Their strategic initiatives and market positioning continue to drive performance, while the share buyback signals confidence in future prospects. John, any final thoughts?
Moody's is well positioned for continued success, but investors should keep an eye on operating expenses and debt levels. Overall, the company's strong fundamentals and strategic focus make it an attractive investment.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Moody's performance in the comments below.